Well, a few earnings are lined up today, and let's start off with Asian Paints. That's going to be the stock in focus. Remember, we'll be posting its quarter numbers. Mangalam joins us now to run us through all the key expectations. Mangalam, over to you.
Well, Nigel, before we go into the numbers, the stock is off a good about 15-16% from its record high. Like all paint companies and all consumer companies, three key reasons for that. The first one, of course, we've been talking about it, rising crude prices. Crude derivatives are an important input for paint companies. Secondly, weaker rupee. A lot of that is imported, so weaker rupee hurting them as well. And thirdly, it is the valuation. So high valuations in the FMCG space taking that stock lower as well. Add to that, currently the stock trades at around 43-44 times 1 year forward earnings, FY20 earnings that is. With that, we take a look at what the street is expecting from the second quarter numbers. Top line growth, 12.5% is on the cards. That's the consolidated poll of all the analysts that track the stock. Add to that, we have a revenue, an EBITDA growth of about 12.8%. The street believes that despite increased input costs, the company's cost-cutting measures, as well as the fact that a crude price impact would come with a lag, the margins would remain stable at around that 12.8, 12.9%. And finally, the net profit growth should be around the 10% mark as well. For Asian Paints, most important thing is to break up the top line in terms of volume as well as value growth. The company has taken price hikes of about 3 to 4%, so that is going to reflect. And domestic volume growth, the key number that we're looking at is anywhere between 8 to 10%. The company does not specifically reveal the volume number. If they say anything high single digits or early lower digits is something that the street will take with both hands.
Okay. Thank you very much for that. Nigel, Hindustan Zinc?
Well, the numbers are expected to be more or less weakish. Remember, in Friday's trading session, the stock had a big run. It was up close to around 6%. Let's see what the numbers come out with. But if I compare it on a year-on-year basis, it shouldn't be such a great quarter. Now, if you look at it, the top-line growth that's expected, in fact, it's a degrowth of around 11% approximately. Base metal prices on the whole, whether you look at zinc, lead, or even silver, they've been lower on a year-on-year basis. Even on a sequential basis, they have been seeing some, selling. But importantly, the rupee has been weaker, so that's what helps them. So rupee depreciation is something that will offset some kind of that, correction that we've seen in base metal prices. Now, in terms of volumes, remember, zinc volumes are expected to be lower. Kotak has thrown up a few numbers out there. They're expecting zinc volumes to come in lower by around 12%. Zinc volumes are basically lower because they've been shifting from open cast mining to underground mining. So in this process, in fact, we'll have to keep an eye out on how underground mining is ramping up. So contraction seen in volumes out there. Lead, we're estimating volumes, or Kotak's estimating volumes to increase out there. While for silver, it's expected to be increased. That's because they're expecting the SK mines to ramp up, and that's what should lead to higher silver volumes as well. Moving to the operating profit, we're seeing a bigger degrowth there. You have a top line degrowth of around 11%, but operating profit is expected to be lower, telling you that margins should compress. What really leads to margin compression? One is that prices are lower. Second is that volumes are lower, primarily for zinc. So that's what really will lead to margin compression. The other factors you should look up is ramp up of the underground mining, point number one. Point number two is how much of the coal are they receiving? Because coal linkages are in place, but they have not been receiving too much of coal. And finally, rake availability for linkage coal as well. Profit number expected to contract by around 30%. Keep an eye out on the other income because the bond yields have been moving around. That's what could lead to lower other income. So keep an eye out on the stock.
Okay, and Oberoi Realty will also be on our radar. Sonal, how are the sales looking this quarter?
Well, on a YOY basis, if we compare, the results will be very good. We are expecting a revenue growth of around 136%. EBITDA growth is expected on the same levels to go up around 135%. Margins will be slightly contracted. We are expecting a decline of around 40 basis points this time around. But profits, they are expected to be very strong this time around, expecting a growth of around 150%. So on a YOY basis, the numbers are expected to be strong, but sequentially we could see some weakness because remember in last quarter the company had come up with some subvention schemes in the Mulund projects, so that is something that drove the sales last time around. Other factors that we'll be watching out for will be this volume growth that will come in at around 6% on a YOY basis at 1,87,600 square feet. That compares with around 0.1 million square feet last year and 0.29 million square feet that we saw in last quarter. quarter. So we are seeing some sort of weakness in there. Margins, they are expected to decline slightly. That is because of lower margins in one of its projects, that is Sky City project. But bookings are expected to decline quarter on quarter because the revenue recognition norms in some of its projects are expected to be lower this time around, and that's why we'll be recognizing lower revenue in the company. Sales bookings momentum was very strong that we saw in last quarter, came in at 623 crore rupees. So let's see what are the booking amounts that the company reports this time around. But overall, we're expecting a good quarter.
Thank you very much for that, Mangalam, Sonal, as well as Nine Shift.